Welcome back. Today, the landscape of artificial intelligence shifted beneath our feet without a single line of code changing in the public eye. Anthropic has officially surpassed OpenAI as the most valuable private AI startup in history, securing a staggering $65 billion funding round that pushes their valuation to an unprecedented $965 billion. This isn't just another financial milestone. It's a declaration that safety-first models are now the gold standard for institutional capital. In this video, we're breaking down exactly what happened, why Wall Street bet everything on Anthropic over everyone else, and what this means for the next decade of AI dominance. Stick around because by the end, you'll understand why this specific moment in time defines the entire industry's future trajectory. When we look at the numbers, the sheer scale is mind-boggling. Anthropic didn't just raise money, they raised confidence at a valuation of $965 billion, leaving OpenAI behind at roughly $730 billion. But how did a company built on constitutional AI and strict safety guardrails climb ahead? The answer lies in the current market climate. Investors are terrified of regulation. They want assurance that their massive infrastructure investments won't become liabilities overnight. Anthropic's model, designed from day one to align with human values and avoid catastrophic failures, offers a premium that raw compute power alone cannot buy. Think about it like real estate development versus speculative mining. OpenAI has been the aggressive miner, digging faster and deeper into unknown territory. Anthropic is the architect building the safest, most regulated skyscraper in town. When you have billions of dollars at risk behind every API call, safety isn't a feature. It's an insurance policy. The recent data suggests that as governments tighten their grip on generative AI, companies with proven safety frameworks will command higher valuations because they offer predictability. Anthropic proved that you can scale aggressively while maintaining strict ethical boundaries, and the market rewarded that discipline handsomely. This shift signals a maturing industry where trust is now the most valuable asset in the room. Let's talk about the revenue numbers because they tell an even more aggressive story. Reports indicate that Anthropic's run rate revenue has crossed $47 billion this month. To put that in perspective, that is a monthly recurring revenue figure that dwarfs most traditional tech giants operating at full capacity. A run rate of $47 billion implies an annualized value far beyond current public market standards for software companies. This suggests that Anthropic's customer base isn't just growing, it's exploding with enterprise adoption. Why such massive uptake? Because the early adopters have already moved past experimentation and into deep integration. They aren't using chatbots for simple tasks anymore. They are embedding these models into critical infrastructure, financial systems, and healthcare platforms where failure is not an option. The fact that investors like Sequoia, Greenoaks, and Altimeter Capital led this round shows that the smartest money in Silicon Valley sees a clear path to profitability. While OpenAI is still largely a private entity navigating its own complex IPO strategy or potential sale, Anthropic is already operating with the financial confidence of a public utility. This revenue momentum validates their technical approach and proves that safety features actually drive enterprise adoption rather than hindering it. Both companies are now planning to tap the public market as quickly as this year to acquire computational resources. This is where the real battle begins. Training the next generation of models requires exascale computing power that simply cannot be built in-house efficiently anymore. Anthropic and OpenAI need to buy their way into the future, acquiring data centers and chip manufacturers rather than just renting cloud time. This shift changes the game from a software war to an industrial one. It's no longer about who can write better code. It's about who controls the physical infrastructure of intelligence. By raising $65 billion, Anthropic has essentially bought a fleet of supercomputers that will outpace anything OpenAI currently possesses for training their next model. This acquisition strategy allows them to iterate faster on safety research and scaling capabilities simultaneously. The race is now about how quickly they can deploy these new models into the wild while maintaining those critical guardrails. If Anthropic can leverage this massive capital injection to train larger, safer models first, they cement a technological moat that will be incredibly difficult for competitors to cross in the next 5 years. So, what does this mean for the rest of us? The gap between the leaders and the followers is widening rapidly. If you are building an AI startup, or even just using these tools professionally, Anthropic's dominance suggests that the era of move fast and break things is officially over in favor of build safe and scale sustainably. For businesses integrating AI into their core operations, this news is a green light to prioritize partners with robust safety certifications. The risk profile has changed. Relying on less vetted models carries higher financial and reputational risks than ever before. Furthermore, the valuation jump indicates that we are entering an era where AI infrastructure will be as critical as electricity or internet access. The companies controlling this infrastructure will define the economy of the 2030s. Whether you're a developer, a business owner, or just a consumer, understanding that Anthropic is now the benchmark for safety and value means your strategy needs to align with that standard. Don't chase every new model. Focus on the ones backed by this level of institutional trust and financial backing, because that is where the longevity lies. The future belongs to those who can scale safely, and Anthropic has just proven they own that ticket. We've seen how a single funding round reshaped the valuation landscape, pushing Anthropic past OpenAI at $965 billion. We explored why safety became the ultimate currency for investors, dissected the staggering $47 billion monthly revenue run rate, and analyzed the shift toward acquiring computational infrastructure. The key takeaway is clear. Trust drives value in this new economy. If you found this breakdown insightful, hit that like button to support the channel. Subscribe now so you never miss an update on how these giants are redefining our world. Drop a comment below telling me which AI company you think will lead the next 5 years.